This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices climbed on Wednesday, rebounding from a 5-week low in the previous day, on concerns of supply disruptions after U.S. President Donald Trump's threats of tariffs on India over its Russian crude purchases. Brent crude futures gained 43 cents, or 0.6%, to $68.07 a barrel by 0330 GMT, while U.S. West Texas Intermediate crude was up 40 cents, or 0.6%, at $65.56 a barrel. There's still plenty of uncertainty over the U.S. imposing secondary tariffs on buyers of Russian oil. Market chatter is growing that China's purchases of Russian oil may come into focus next, commodity strategists said on Thursday.
The falling number of oil and gas rigs deployed across the United States is reaching a level that would indicate onshore crude output from the world's top producer could fall in early 2026. U.S. energy companies are producing record amounts of oil, much of it from onshore shale fields. New techniques and technology, like longer lateral wells, automation and more powerful equipment, have driven productivity gains across the industry that have allowed oil companies to pump more with fewer rigs and less capital. But the number of rigs working in U.S. shale fields has almost fallen so low, and is projected to keep falling, that those improvements will not be enough to keep onshore U.S. production rising, or even steady in some basins, analysts say.
Moving on to the top news in the energy sector.
India's power plants are withdrawing more coal from record-high inventories and slashing fresh purchases from state-run Coal India, as coal use for power generation fell for a fourth month despite a rise in electricity demand. Coal-fired power plants typically draw from inventories when electricity demand growth outpaces production by Coal India, which accounts for about 3/4 of the country's production. India is the world's number 2 coal producer and consumer after China. But a sustained rise in hydro and renewable power has curbed coal-fired output, according to analysts and government data.
U.S. President Donald Trump's scrapping of subsidies and tax breaks for renewable energy developers has stalled but not derailed solar power capacity growth across the United States. Through the opening half of 2025, installed capacity of utility-scale solar systems has expanded by around 10% from the year before, data from energy data portal CleanView shows. That expansion pace is well down from the 33% increase in 2024 and an average annual growth rate of 29% since 2015. Next, we have the top news in metal markets. Gold prices edged lower on Wednesday due to a slightly firmer dollar, while investors held back from making big bets ahead of U.S. President Donald Trump's decision on appointments to the Federal Reserve. Spot gold was down 0.1% at $3,376.69 per ounce, as of 0631 GMT, after hitting a near 2-week high on Tuesday. U.S. gold futures fell 0.1% to $3,432.40. The dollar rebounded from a 1-week low hit in the previous session following weak U.S. jobs data that raised rate cut hopes in September, reducing gold's appeal to holders of other currencies.
London copper prices edged higher on Wednesday after an accident at the top producer Codelco's Chilean mine raised concerns over supply, though rising inventories on the London Metal Exchange capped gains. 3-month copper on the London Metal Exchange was up 0.3% at $9,667 per metric ton, as of 0700 GMT. However, the most traded copper contract on the Shanghai Futures Exchange lost 0.3% to 78,280 yuan, $10,889.01 a ton.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures slipped on Wednesday, weighed by weaker Chicago soyoil prices and sluggish demand from key markets, though gains in barley and soyoil helped limit the losses. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange slid 41 ringgit, or 0.96%, to 4,249 ringgit, $1,005.68, a metric ton at the midday break. The contract rose 2.46% on Tuesday. Crude palm oil futures traded lower as it was pressured by overnight weakness in Chicago soyoil futures, said Anilkumar Bagani, research head of Mumbai-based vegetable oil broker Sunvan Group.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.